you still have this stock at outperform. You lowered your price target from 703 down to 594, but we're going to show the chart. That's still double from where the stock is trading at right now. What are you seeing in this stock as it's facing a number of headwinds?
Yeah, so two things there. One, we actually did just put out our updated numbers on the company following the CEO change, and so we're actually at 377, still outperform. In the note, we also highlighted that we think this is a temporary decline, in an excessive decline in the valuation multiples. So when you kind of calculate where we think we could be ultimately with the stock, maybe like 482. So you're talking about 37% upside, 75, still huge upside. What we think is going on with that company is a lot of underlying assets that are really valuable. The turnaround in the Medicare and Medicaid businesses, which ought to be industry-wide, should be taking place over the next couple of years. And value-based care is still an emerging industry. Only about 15% of people are in value-based care contracts today. That's Optum Health, their biggest and most important unit. And we'd expect that to ultimately be 100%. So we see this as really valuable, but significant execution issues that have really shaken investor confidence. They've really underperformed in results. And so the stock prices, reflected that and more so.
All right. You say your new price target is, I'm sorry, 395 now?
377.
377. Okay. Very important to know, and thank you for correcting us on that. Still about a 30% upside from where the stock's trading at right now. So you mentioned valuation. I think that's interesting. A lot of people are seeing this potentially as a valuation play. I'm looking at UnitedHealth trading at about 11 times forward earnings. Is that an attractive valuation for a company facing so many headwinds? And I think it's very important to note. They said Medicare Advantage, that costs more than they expected. Isn't that about 30% of revenue?
Yeah. So Medicare Advantage is an enormous business for them. It's probably 20% of revenue, a little more than that on the insurance side of the business. But Optum Health, which is around another 20% of the business, is also very geared to Medicare. So you're right. It's a significant portion of the business. As you look at Medicare Advantage, what you've really suffered in that space is 2 years of tremendous rate cuts while you were having high utilization in the space. That was 2024, 2025. 2026 has a much more attractive rate increase. You're seeing a huge withdrawal of competition in the Medicare Advantage space. So we'd expect the pricing cycle to turn, and we'd expect that those Medicare Advantage plans should really improve margin 26, 27, 28. So that's one of the things for a sector that we think is going to be attractive here. Right. When you're thinking about valuation, we've significantly discounted each of the component parts of the business, and we've even noted that there's a lack of management credibility right now, and so that has caused us to move towards like what I would call the lower end of any of our ranges.
I want to pull on that thread with you, Lance, just for the audience's edification. UnitedHealth trading at about 11 times. Correct me if I'm wrong. I think some of their peers are Humana trading about 14 times. Also, Elevance Health trading also at 11 times forward earnings. So valuation discount doesn't seem to be that much. But I want to go back to the guidance poll and maybe a lack of confidence when it comes to management. New CEO, who's actually the old CEO, former chairman, coming back in. The pull of the guidance, do you think the stock move based on that was a bit maybe overdone? I mean, it seems like there's a chance at least that they pulled the guidance to give the new CEO just a chance to kind of reset the table.
I think that is the case. And I think as you listen to the call on Tuesday, as I spoke with the company after the call, what you really got a sense of was the new CEO, Steve, who is the former CEO and is the chairman. He really had just engaged. I don't think, being a former operator in the industry myself, I don't think he wanted to go in there and accept what the current expectations were. He's going to reset that. And I imagine they're going to do a significant reset on their pricing expectations, and they're going to really focus on margin in 26. Their bids for Medicare Advantage are due around June 1st, so they still have ample opportunity to go through and fix those. And that should set the table for what ought to be really outsized EPS growth in the recovery of the sector 26 and really probably for the 3 years through 28.